trading week has begun, and it would appear the currency markets are still feeling the shake-up post-US shutdown. Lutz Karpowitz is on the phone now to share his G10 forecasts. Lutz, as attention is drawn back to taper talk, discussion of delays has put further pressure on the US dollar. What would you say to comments that the NOK and Australian dollar are currently the G10 currencies investors should be focusing on?
Well, first of all, it's very natural that with these upcoming US dollar weakness and the uncertainty what the FOMC will decide in the future, investors are looking for alternatives. But you have to keep in mind that the recent appreciation of NOK and Aussie against the US dollar was rather a US dollar weakness. If you compare these two with the euro, for example, you see some depreciation. Nevertheless, especially the NOK for us is a very interesting story. You can see that when in June the central bank signaled that there might be a rate cut towards the end of the year, the NOK came heavily under pressure against the euro. And even though that the central bank changed its rate path projections in September, which means became more hawkish, the NOK couldn't repair its losses. So this compared with the situation that we've got brilliant fundamentals in Norway. They've got a robust economic growth. We have a strong budget surplus, current account surplus. Of course, they rely on the European economy, but also on commodities. So this is a very good fundamental setup. So for us, currently, euro-NOK rates above 8 are not really justified, and we expect a strong appreciation of the NOK against the euro, for example.
With little change in euro-US dollar trading, it's thought euro price action could be supported by a looser for longer Fed policy. There's been some allusion to a 140 level should the US dollar crash, but what are your forecasts for this pair over the short, mid and long-term period?
Currently, our forecasts are still looking for a stronger dollar towards the year end, rates like 135, and also towards the end of next year with rates around 130. But we have to admit that these forecasts are just under review, as our economists expect the Fed to start their tapering, not this year anymore, maybe just towards the mid of next year. So this creates an environment where we could see a weaker dollar, and also a level of support, of course, cannot be excluded.
Commerzbank have today commented that it anticipates low volatility sideways trading on this Monday for the US dollar Japanese yen. Can you expand on these expectations and your forecasts for coming trade?
In fact, the yen story is a very interesting one, and it can very easily explained by what we saw last night. Actually, we had some trade balance data and a comment by Prime Minister Abe. So trade balance created a record deficit in seasonally adjusted rates, and the trade balance in Japan is in deficit since February 2011, and you can hear a lot of analysts. They always said, okay, this deficit in the trade balance was just due to the Fukushima crisis, and it will not be a long-lasting situation. But what we see now is that the trend in trade balance is even deteriorating further, and this also means that if the trade balance will be in deficit over a longer term, the current account balance will also turn negative. And this would mean that Japan is reliant on foreign capital inflows, which in turn would mean that the Japanese finance minister has to pay higher interest rates for his government bonds. And if you keep in mind the very high level of debt to GDP ratio in Japan, this is a very, very severe situation. And this brings us directly to what Prime Minister Abe said this night. He mentioned that Japan will only get control about his debt level if he can create some nominal economic growth. So that means he wants to bring down the debt to GDP level by increasing GDP, but not in real terms, what would mean that this is a strong economic situation. He will just do it on nominal terms, which means by in creating inflation. This in turn is a very bad signal for Japanese bondholders and will also be a burden for the yen, and that's why we are very much concerned about dollar yen. We have forecast of 102 towards year end this year and 115 for the end of next year.
In the wake of taper talk, as mentioned earlier, it is the Swiss franc which has been the best performing currency versus the US dollar. But what are we seeing against the euro, and how do you see this pair moving forwards?
Yeah, since the beginning of October, we see the Swissy depreciating against the euro. But in general, the situation is, well, on the one hand, you've got this minimum rate implemented by the Swiss National Bank. So it's very clear that Euro-Swiss will not trade below 120. On the other hand, we know that the Swissy is pretty much overvalued against the euro, so it's reasonable to expect some kind of depreciation. And that's also something where the S&P waits for. Now, what we need actually, I mean, we've got this trading band between 122, 124 so far. What we need is some kind of trigger to get us out of this trading band. So this could be some negative Swiss data, or what would be the better trigger, obviously, is some signs that the recovery in the Eurozone is really picking up speed. So, and that's why we think that Euro-Swiss will even trade high in the near future, and we would expect rates like 125, 126 towards year end, and maybe something even above 130 at the end of next year.
Many thanks, Lutz. That's all we've got time for right now, but why not head over to the Dukascopy TV Facebook page and tell us your pick of the currency pairs this week. Goodbye for now.